Just reported their earnings, and in all accounts, they crushed it. They absolutely smoked it, except they're getting thwacked after hours, down 8% after hours. What's going on? Why is everybody getting absolutely destroyed for having excellent earnings and growth in this massive AI bubble? Is this the top? Is that why everybody's so worried? Is that why everybody's fear selling all their positions in AI? Let's dig into it. Let's figure it out, man. This is what we do. We are traveling the AI bubble together. That was lame. Let's go. All right. Stepping into our dashboard. We're going to take a look specifically at Google here right away on Google. And then we're going to get into the where we are on the full AI bubble thesis, where we're operating, what's the thing. So um, yesterday we went through and we said, okay, what are the things that we're looking for with Google's earnings to update us for, the AI bubble? And what we're trying to do here, just so, if you're new here, what we're trying to do is figure out, we know we're in an AI bubble. We know this is absolutely a bubble. Bubbles are amazing things. Bubbles are things that create generational wealth. They're things that we still talk about hundreds of years later. Um, but most people get focused on the downside of the bubble, the selling of the bubble. It's the big upside that you want to be positioned on to catch the big upside. And you want to know when it's over so you can, get out, get short, get away, be safe, survive the bubble. And that's what we're doing here. Okay. So every company that's reporting earnings through this earnings season that has something to do with our thesis, we're going to be taking a look at. Okay. We're going to update our position every day. We're going to update what we're doing all the way through so that we can have a plan, so that we know as we get through this earnings season, as the year goes on, as the decade-long bubble, whatever goes on, we need to know when things are safe and when things are risky. Right now, we have some really good information. Things are risky right now, right? This is a bull market for, the rest of the market. AI build out is 20-30% sell off, generally speaking, here, but the rest of the market is still almost at all-time highs. So that's given us some information. When earnings report like this cause great earning report cause the market to sell off, that's when you know something's different and we got to pay attention. Okay, so first thing first, this is Google. Well, they're catching a bid now, coming in about 350 into the close. Obviously, people either knew something or just got worried towards the report. And yeah, coming into earnings at so right around this time is when the market closed. So you're at about 348, got down to 324. So it took about an 8% haircut after the bell when they reported. And let's dig into why they got punished there. The build out is monetizing. Cash returns are lagging the investment cycle. This means they are investing and they are not reaping the benefits of those investments yet. And so people are getting a little worried. They're increasing spending, but they're spending a bunch of money and they're not getting the result that they want yet. I want my money. I want my money. We're investors. We have like slow, when we call ourselves investors, we're just like, aggressive investors, slow traders. Alphabet showed the cheaper intelligence does not automatically destroy the hyperscaler moat. So that's a shot at Kimi K3, which came out on Friday and pretty much shows that, the theory that people are worried about is these cheaper models that are competing with Anthropic, OpenAI, whatever, are not able or we're going to take a ding. Well, Google's saying that's not the case. Model scarcity is fading. So everybody can get a model now. Everybody can get amazing models to do what you need to do. You need to send a really good email, like whatever. Use a great model. But cloud distribution, search, TPU, security, enterprise relationships are all still capturing the value. The new risk is no longer demand, is whether 180 to 190 billion dollars of capex that was spent in 2026, is spent so far in 2026, can convert into free cash flow before depreciation cats up, before the infrastructure that they're investing depreciates, and they have to go and buy new TPUs, new racks, new data centers, swap out the old stuff for the new stuff. And that's kind of the thing right now. Um, but let's take a look. Cloud revenues were up 80%, 82%. That's awesome. I can guarantee this is because they're doing so good with the TPU, the tensor processing units, because companies are getting smarter. The frontier models are focused on throwing massive GPU, spending money on the most advanced GPU, fanciest machines in the world to just kind of figure out the problem, where the more efficient companies, the more efficient businesses are figuring out how to use more exact work. They don't need to throw everything plus the kitchen sink at a GPU. They can like, oh, I know this is my data set. This is what I need to understand. This is what I need to learn. Great. I don't need to spend all that money on GPUs. I can use TPUs, and that's what they're doing here. Okay, so that's why one reason Google's really benefiting. Also, the Flash, Gemini Flash, those fast models that they run, they're really good for a lot of tasks that you as a business person would charge a customer or provide a customer for. You don't if, you just go get Fable or GPT 5.6 or whatever if you want that quality. But if you want to solve a problem based on what my company offers, I'm going to give you the best that I can offer, and still be profitable. And Gemini, Google specifically, offers an amazing product for that, which goes along with their cloud, right? So you can, just kind of integrate everything right together with all your Google apps, with, Word and or Docs and Drive and Gmail and the notebook and the Google Cloud. Um, they have $500 billion in backlog. They've got demand that they cannot meet. And they're making 35% on that cloud margin. So big green light on cloud. Profitable demand is real in the operating line. The bigger bill is now visible in free cash flow. This is where we're coming to, how the chain now fits together. Okay. So we got IBM warned. Okay. But they reported today. So we'll take a look at that too. TSMC last week reported they were making money, very profitable, but they also reported, I guess they increased their spend. And so the market was like, ooh, you got to spend more to make more? What's that? What else happened? We had Kimi K3. Basically, you don't need to have, $1 trillion data center to compete with OpenAI and Anthropic, apparently. Meaning, when I first got into this game, when I learned how to build software and do things, we were very resource constrained. We didn't have powerful CPUs, let alone GPUs. We didn't have a lot of memory. I mean, we had to write code that had to deal, your computer, we had to make your computer sing with like that little bit of chunk of memory, along with everything else it was doing. If you recall back in the day, you could have like one browser open, and that was kind of your whole use of your computer. If you want to do something else, you had to shut down the browser and, launch something. Now you can run, 1,000 tabs. IBM came out, and they reported today too. So clients shift quarterly Capex toward supply constraint servers. Okay, so this kind of falls in line. I don't think we're going to dig into IBM's earnings on that. This is about Google right now. This is about Google. They're the most important thing right now. The monetization result, cloud accelerated to 82% growth. Like it doubled. That's quarterly, right? That's an 82% growth in a quarter and maintaining 35% profit margins. Yeah. With $500 billion. Search grew. This is good to know, right? Everybody's worried about search because, you can just chat GPT your questions and, whatever. uh, and then operating proof arrived on that end, but free cash flow did not. So their free cash flow is down. So we had 3 tests that we were focused on. Is AI creating incremental, profitable cloud demand? We can absolutely guarantee that is the case for Google. So our green, amber, red, green case, astoundingly accurate, unambiguously pass. AI demand is incremental, rapidly growing, and profitable at the cloud operating line. So their cloud business, it's amazing. you cannot, as we learned, when everybody discovered that Mac Minis were one of the best tools to run, models on and do your AI on locally. Great, they got sold out, and then Mac Studios, everybody went out and Mac Studios and DGF Sparks, and so like what you could do locally with computers, you couldn't really, you just couldn't get it, and so you need cloud to spin up and like spin up an instance. If you're going to do a training run, spin it up, wind it down. It's flexible in that sense, despite the backlog of $500 billion. Next, Capex and infrastructure. Is Google spending into real scarcity or spending to avoid falling behind? This is where we find ourselves in the risk mode. This is where the big risk came out on earnings. Okay. What we were looking for was we were looking for Capex rising due to profitable demand, and we didn't want to increase our costs with that demand, and that's actually what happened. So demand justified continued deployment. So the demand's there, $500 billion. They have the demand. They have 82% growth in a quarter. Of course, they are going to be incentivized to continue to scale. But they were not able to convert that into like the cash that was coming in was not able to spend on their current obligations. So they had almost a $6 trillion free cash flow deficit. So, they had to tap into their savings accounts there to pay the bills. That's what that kind of means, right? They had $44.9 billion Capex, which is 100% growth, and they have to fund some of that from their savings account. But so, if you've got the demand and it's working and it's doing all that, that's kind of like, this is just nitpicky stuff, really, in my opinion here. But whatever. Demand justifies continued deployment, but quarterly cash economics are negative, and future depreciation is still climbing. Okay. And then the next thing we're looking at is Gemini and the AI products. Well, they definitely grew. We got a green light here. AI adoption becomes measurable revenue without damaging search or cloud. Yep. Search was up 17%. Like I said yesterday, you're the search, you're the verb for what you do on the internet, and then you just apply your own AI in there to make it better. Like it's working. You open up a browser, you go to Google and you ask it a question, it gives you the AI answer in the top, right? And then it still monetizes on those with ads and whatnot too. So it just is still a really good business in that sense. 90% of the Fortune 100 are using Gemini. Like I said, businesses are understanding that we need to hold our own data. We need to do, we want to use, we'll use the Gemini models. But, Google has a brand trust that Anthropic and OpenAI does not have. So even if they are using the open model of Gemini as opposed to doing their own, self-hosted on Google Cloud, it's the devil, you've been giving Google your data for the last 20 something years, right? And they've not done what OpenAI and Anthropic have done. So the Fortune 100 is definitely using Gemini for that reason. Distribution held. AI usage expanded without damaging search. Search actually grew, and enterprise adoption is now visible at scale. Okay, so that's Google. Now let's bring that into the bigger picture here. Okay, what changed for this AI bubble after Google? Are we on the downward slope of a 60-80% correction? Or is this just, the next phase, and we've digested Taiwan Semi, we've digested IBM, now we're digesting Google. Is this the next phase that now we expect all the companies to kind of do this? And then maybe we start seeing, we've got the chips, We got the, I guess IBM's consulting. I don't know how to like. It's kind of its own thing. Um, it doesn't give me. It's not as big in the AI space for me, but I mean, they are frontline to Fortune 500 for sure. So what they're where they're at in there is important for sure. And but I kind of basketed in them in more of the like consultant services as opposed to frontier like leading innovation. No offense to IBM or anybody who works there, but that's kind of Google has their own TPUs. Taiwan Semi literally makes the chips that we're doing this. So it's, comparing, they're not apples and comparing apples to apples. um, the report strengthened the demand and distribution cases, weakened the near term cash return case, and moved the moat away from the model layer. Okay, so we already know our thesis was the model. First of all, you can't really, most of us can't, or, if we had the opportunity to invest in OpenAI or Anthropic in the last year or two, we should have. Right now is probably not the time to go seek an allocation, try to get in, elbow your way into that. I think, they've kind of peaked uh for now, whatever. Their margins are pretty wild. They're still private, so there's not a lot of public information there. Very volatile. And we saw. I mean, I was just thinking if Anthropic was public and they got regulated by asking to get regulated, and then acted like, oh no, their stock probably would have taken 20-30% hit, and then Kimi K2 or K3 comes out, their stock probably would have taken another 20-30% hit. So you could be down about 50% in the last 2 or 3 weeks on Anthropic. Like that's up if they were public. So luckily they don't probably have to go raise right now. They did as best they could. That was kind of, SpaceX was probably the like pinnacle of like this raise cycle. So all that to say, where all of this is going to be going is not so much into like as investors. We're not looking to get into those companies. We need to go where the reality that move's happened. Um, there might be a chance to get back in and part of it, but that's not our game. We know that there are going to be bottlenecks here. Google is spending the money that they're not spending cash flow to grow. They're spending cash they have. They're investing. Like they're putting money to work. And why would they do that if they believed that it wasn't the thing to do? Of all companies, they see firsthand the demand, 80 something percent growth in cloud. They see the demand, everybody in the Fortune 100 is using their models. Um, Search is continuing to grow. Everything is working for them. So if the question is like, hey, do we tap into our savings, to pay, to invest in this new data center, to do all these other things? It's an easy yes. And their stock, takes a little bit of a hit, whatever. We're in the market regime. We're taking a hit for excellent earnings, excellent news, except like maybe this one little nitpicky thing. Great. What does this mean? Thinking about this in like the bigger picture here. Right now, we're in a market regime where good news is being sold. Slightly not good news is being sold. All we've gotten was excellent news in this earnings period and had a slight investment in the future that caused everybody to, oh no, because, we're down 20-30% already. And, we kind of already are positioned for this. So another little dip like this isn't really that big of a deal. It's just kind of a repositioning. Um, this is how you can't redline at the top all the time. You need to like take like absorb these big runs somewhat, and you can correct. You have to correct prices. There's prices that need to go back, and we need to search for value, right? We need to find deals. That's what price discovery is. You got to go find like where's the buyers, where's the sellers. It's an auction, and right now it's very easy to sell your Google when it was at 400 or whatever. It's harder to sell your Google right now at a discount. It's very easy to sell it. That's where it is in the market. A demand is real enough to support 82% cloud growth and expanding cloud margins. Google's distribution moat held, search grew 17%, and AI expanded. So AI didn't cannibalize their search, made it better. Full stack advantage strengthened across cloud, TPU, security, data, and enterprise relationships, of course. Power cooling, network memory, and deployment bottlenecks remain structurally scarce because spend is still accelerating. So they are, if they're spending money to get, the power cooling, memory, networking, those sort of things, and it's a physical item that has to be manufactured, they're probably going to be spending some money and getting lag time. Pure model layer, what weakened our model, pure model layer scarcity and proprietary model rents weakened for. Okay, we already knew that. Kimi K3, near term hyperscaler free cash flow quality weakened as 44.9 billion of capex pushed free cash flow below zero. So, you know, that's what we got today. Headline revenue beat is no longer enough. People are paying attention. They're paying attention to the more important parts of the earnings. Backlog conversion, depreciation must now prove capital efficiency. When we were coming out of the bear market in 2023, 2024, having revenues and earnings beat, that was all you really needed because you were just coming out of a bear market, right? Like it was just people are starting to spend money, and that was kind of, people are always late, so they're surprised when the market continues to beat. Now we're years into the bull market, and it takes a lot more to prove a $400 stock price. What we think now, this is what my model is telling me. This is my thinking. Adjust yours accordingly. Kimi did not break Google's moat. It moved the moat. We now prefer the layers that own distribution, custom silicon. Google, custom silicon. They have the TPU, firm power, grid equipment, cooling, networking, memory, and security. Google remains a platform winner. But, and this came out today, GE Vernova is cleaner proof because scarcity is already converting into free cash flow for them. We didn't talk about them today, but again, the power providers, the infrastructure to build data centers and to build all this out, like I said, the backlog is there. They are taking orders. They're taking that money that Google spent, that free cash flow that they spent, that's where they spent it. And so the money's now over in those, the big manufacturing the things where they need to get that energy. They need to convert that energy. They need to convert that capital into data centers. What to watch next? So what we're watching is backlog conversion and cloud margin. Gemini paid revenue, search ad yield, TPU utilization, depreciation growth, free cash flow recovery. So anybody who, any of the companies that are hyperscalers specifically that are not tapping into free cash flow, and we get that. So let's say we get, now that we've got Taiwan Semi and Google and IBM reporting, yeah, we're spending too much money. And I think Tesla did too as well today. We're spending a little too much money. If that comes out and then Microsoft's not doing it, or Meta's not doing it, or Amazon, or any of these companies, if they're not spending the money in free cash flow, it's proper spend, proper growth. It's like, oh, why is Google, why did, you start looking at why Google did it, Taiwan Semi did it, and you start thinking, these guys are not doing it now. So maybe they're not going to be able to keep up. These are some things we just got to watch out for. Okay. Let's see. Demand and economics begin to converge. Yep. Demand is real. Physical build out may be running ahead of profitable demand. Okay. That's kind of that's the red flag we got here. in essence, we're kind of watching to see if Capex gets reserved or reduced. Uh, Anything on spending starting to show that we're going to stop spending. Again, it does not look like Taiwan Semi or Google are thinking that that's a thing. So that's what we're doing. Let me go to we'll go back to our earnings dashboard and see if we can just like take a look at everything here, see where we are, and come on, computer. There we go. So free cash flow is the big thing. AI buildout is not yet running ahead of demand. Google proved that distribution, enterprise cloud, TPUs, and search can capture value even as model scarcity weakens. The thesis strengthens for full stack hyperscalers and physical bottlenecks, but weakens for pure model layer rents. Okay, again, we're we're cooking, man. This is we're in a good spot. I have to believe Taiwan Semi and Google are investing and they're willing, they're no, they know that they're going to be tapping into their own pockets to do this, and they might get hit and they do it anyway. Okay. Let's see. GEV, IBM, Danaher, life science improved and bioprocess orders accelerated, but the AI pull through remains indirect. So Danaher got crashed or crushed. That's another one. Let's see if we can go to our desk. Our thesis is strengthening. We've got tomorrow, we've got Intel. Intel's an interesting one. We're going to keep our eye on that. They are like a U.S. foundry, and they took on a big investment partner with the United States. So let's see, where is the today? Let's go back to okay, these are the ones that reported. Intel's coming in. Google separate shot. Okay, we did that. Tesla demand paid robotaxi and autonomy unit economics deployed broadened, but 1.4% operating margin and negative free cash flow leave the economic proof unsolved. Tesla's wild. GE Vernova is the strongest paid proof that data center power and electricity scarce are accruing to suppliers. Intel, pre-wire, the Intel earnings decision. That should be out. Comfort Systems, BRT, looks like we are going to last little bit of news. Built in Fort Worth, Wistron opens advanced manufacturing plant to produce NVIDIA AI systems in Fort Worth, Texas. Interesting. Okay, leaving Apple, Intel, and NVIDIA in the dust. Huawei could join Samsung as the only tech firms producing its own CPUs, SSDs. NVIDIA just plowed nearly $4 billion into a company that's reshaping the cloud industry, increasing its stake by 18-fold. Well, that will be an interesting one. Doubles down on SF Arts with blockbuster $75 million donation to Vanderbilt. Great. Congratulations, University of Vanderbilt. They're on a glow up right now. Everybody's talking about. Okay, guys, that's what I got. Comments down below. Let me know if you got any questions. Let me know your thoughts, what's happening in the AI space. Let me know what you think about the bubble. And yeah, you know what? I'll be back tomorrow. Love you. Bye.